Hello everybody, welcome back. So yeah, I've had a bit of a long drive last night. Got back here about 2 o'clock in the morning. Woken up by about 6. So it's the first time I've actually had a look at the markets since last Friday, I believe. Yeah, it was last Friday. It was the last time I was doing actually any sort of live videos or anything. So yeah, I've been trying to digest the market a little bit today, and it looks basically the same as I've projected, I suppose, for the rest of the next month at least, as in like next month being September and moving on. So yeah, you might find these small-term time frame bounces, and that's absolutely perfectly normal. But as far as I can see, the longer-term time frames, as in like weekly, dailies, or whatever, they are the ones that they're the ones with a strong trend, obviously. And you don't need me to tell you that. And when a trend is in play, you have to respect the trend. What's the time-old saying? Yeah, trend is your friend until the end of the trend. And we're just going to wait until the end of the trend for the next trend to be our friend. So for the moment, what we're looking at here is it's a fresh short signal on the Ichimoku cloud. This is a dump signal, so there's been some people not particularly, I suppose, sure of what it is that we talk about when we talk about these pump or dump signals. So there's two ways to play the cloud. I've got tutorials on my Patreon, and I think they're just there on YouTube, to be honest, for you to watch. But what we look for is that, first of all, there's 4 components to this indicator to suggest a pump or a dump in this instance. This is a short signal. So the first one, in no particular order as well, it doesn't matter what order they come in. So a red portion of the cloud in front, so that's 26 periods in front of price action, which is obviously down here. Price action is below the cloud as well, so that's 2. The next thing we look for is a cross. It can take place anywhere. This one took place in the cloud. It could happen anywhere, above the cloud, below the cloud, or in the cloud. No big deal, it doesn't really matter. And then a fourth thing is the Chiku span, this green lagging span here, the Chiku span, closed below the price action. So what that is now is a short signal. Because it's on a daily, it can take a couple of weeks to play out. This is a daily, obviously. We're not looking for the short signal to generate immediately. So when we're looking at all of this, the last thing to be generated on this indicator to complete the 4 steps of this Ichicloud dump signal would have been this. It would have been this was the last thing we were waiting for. Like I say, no particular order. It doesn't matter what stage they fall onto the chart. It just means that you just got to wait until all 4 are present. And this happened just a couple of days ago, so after this first initial leg down. So when we're looking at something like this, yeah, it can wiggle around. We can move up to resistances, to which there's quite a lot, and then we just wait for the dump to play out. And I expect this one will take us down to at least our previous low and probably a new low. So I'll be looking into the teens. I'm quite keen to start sort of dollar cost averaging back into Bitcoin, into the teens, maybe even starting as high as 19,000, but 19,500 to start front running them. But with the projection that this looks alongside traditional markets, which we'll have a look at in a moment, there's no point in getting too clever. Remember the overall thing there's 2 major things in play. There's one which is an economic outlook, which is not particularly happy. There's also the Bitcoin's 4-year cycle, which is effectively, as far as time is concerned, due to come to an end as soon as next month, and maybe as late as December, and that's just Bitcoin on its own. If you were to isolate Bitcoin from everything else in the world, then that's what it would suggest. So we are looking for another leg down, whether it's a big capitulation or just a dribble down to some major areas. We are looking for further downside generally, and for the 4-year market cycle to run its course and start an uptrend, start a new bull market. Which again, if anyone was around in this last bull market, for instance, bull markets don't. That's not what they do. That's a bull run towards the end. Bull markets generally are like this. I mean, this got a bit excited to start with. I don't want to draw a line. I want to draw a brush. So this one got a bit too overexcited. People went crazy. Derivatives were obviously a major factor to this. But for the most part, we could look at this as a giant sausage shape of about, give or take, about 100% or so. For about best part of 2 years. So we'll be looking for something like that, and that allows us to trade the market, because we were under the impression, rightly so, that we are in a bull market, and I suppose it lends itself to more successful spot trades. But at the moment, we're still in a bear market, so we have to respect the fact that the trend is showing us further downside, and giving us the short signal, and we're below all these resistances, moving averages as well of resistances, which are all downwards facing. We don't have anything on the daily to suggest anything other than continuation of this general move down. And the next major area is going to be 19,000. Back down to the lower side of the range. This range here is just an intermediate little portion, which is obviously coming in at the 10 exponential now. So we're talking 20,007, 20,800, give or take. We can get rid of that. Don't really need that anymore, but we can get rid of that. And if that were to break and we were to move up the top side of the range, which is a bit more of a hardcore resistance here, is 21,005 or 600. Give it 5, 6, 7, 800. So again, we're back down inside the bottom side of this range. This breakout failed. We've got lots of resistances above us. We've got short signals on the daily. I'm not keen to jump back into this market. That's pretty much where I left it with you last week and the week before, saying, look, all these trades that we've been doing, we've had a great time, a great 2, almost 3 months on stock markets and on crypto. Now it's time to sit the market out, to be honest with you, because historically it is true, September has often been a bit of a bearish month. We don't really particularly want to be getting clever in that. Yeah, you can play some shorts if you really wanted to, but there's really, for me, no real need. Let's just sit back and just watch the market, let it do what it wants. All the risk is there for us to see. So we'll just have a quick look at traditional markets. So actually, first of all, we'll just recognise that Bitcoin dominance is still going down, which again shows strength in the form of alts, until the moment it doesn't, which is what I would always expect at that 40% dominance. Doesn't have to happen. Just use this as a barometer of risk, and the lower we go, the riskier it is for any kind of altcoin position. Doesn't have to happen. I made the case that having the Bitcoin dominance this low throughout this entire bear market is actually a good barometer of returns when the bull market comes back in, because altcoins refusing to give up their market caps in comparison to Bitcoin. So it's actually, there's two sides to this. There's one which is from a trader's perspective in the short term, which is saying altcoins risky AF at this particular level. It is a bearish chart, but this is a super support, so let's just respect that. It's the same old story. But yeah, coming into the bull market, this is great the way that it's behaved. And like I say, I made one of those videos for you to watch over the weekend about my the interpretation of this being so low throughout this entire period. We're back down to where we were when the bear market started when it comes to the Bitcoin dominance. So yeah, two sides to this coin. Oil moving up as expected, so my long significantly in profit now, having a great time. This breakout is looking for a move up to, I reckon, $99 to start with. Probably have a decent rejection around 104, 105, and probably I would say continuation after then. I'm hoping I've caught the oil bottom. Now I'm not looking for this to immediately go straight up, but as we draw closer and closer to those winter months, and I think fuel as a whole, energy, should I say, the energy sector will move up. So natural gas, heating oil, and just general crude and Brent, just through association, to be honest with you. And whether or not oil gets weaponized is a different story, but this chart is breaking out, and so we'll be looking for the breakouts to continue. Probably, like I say, the 21 exponential is where my first exit on my long was going to be. You might think, that's a bit timid, but it's just derivatives. I've been in this trade now for almost 2 weeks. You want to take some profit off of that, and that'll be my first area. The reason being, we've had support on the 21 here, and here, and then the breakdowns from here as well. So I'll be looking for a decent rejection around there. So I'll take some profit there and probably move up to this in the coming weeks, 104, 105. It's going to be a volatile asset, so I wouldn't get particularly trigger happy on it. Nasdaq finding its rejection. So this is Nasdaq, not in the pre-market, but the close to it. It's currently up 1%, really. So just recognise that for what it is. If we just have a look at the actual chart itself, we're back within the descending triangle, so not a great place for it to be. A tiny piece of bullish divergence on the daily. It's not really anything to be looking at, really. For the weekly shows it really for what it is, which is back within the triangle, back below all major moving averages, and the only thing of significance is our 200 exponential moving average coming in at a nice even number of 11,500 for the Nasdaq. So we are looking for further downside on the Nasdaq to the tune of at at least about 7%, 7 or 8%, and we know the correlation between Nasdaq and Bitcoin is quite high. So it complements the short signals and everything like that we've seen on Bitcoin on the longer term time frames. So over the next couple of weeks, a new low is very likely to be formed. This is the Dixie, and again, I appreciate this is a long video. It's the first time I've made a video since Friday, really, about what's going on right now. So we might as well look at the overall environment. Same old, really, for Dixie. Being in this ascending channel, at least offers a move up to the top of the channel, at least, which is an 8% move, up to basically the roughly, give or take, the 115, 16, 17 area. We recognize that ascending channels like this do often break down, so there's always that. We could hope for a rejection from there, back down to the bottom of the range and a breakdown, or we could look at it in terms of a much scarier dynamic, which is the one that I sort of speculated on one of these longer term videos, and it is that we are looking at a breakout of a descending, well, I suppose a falling wedge, descending triangle, falling wedge more likely, and we broke out from that, and so we are looking for, I suppose, maybe continuation as a result of that, with a possibility of a new all-time high. I put it to you the other day, all the reasons why that is not completely off the cards, with the destruction and complete collapse of the euro and probably the pound shortly after that, going down below $1, both of them over the next year or so. So this isn't like a shit coin. It's not going to completely dump immediately, but it's over the next 6 to 9 to 12 months. Yeah, we could be seeing euro completely wrecked. 70, 60 cent per dollar, and pound. Yeah, definitely below $1. That's the way that the charts look. That's how they look. And we never normally look at this, but gold is another thing to think about. Gold, if you want Bitcoin, do you want gold? Do you want Bitcoin? Do you want gold? They're supposed to basically represent the same thing, which is store of value and hedge against inflation and blah, 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 blah. Not today, I'm afraid. Not today. We are down below this major horizontal over here on the daily here. A breakdown from a fake out basically from this descending triangle formation. So a breakdown basically. It does look like it wants to go on to stab and tickle these little lows down here, which isn't massive, but further downside for gold, further downside for Nasdaq, further downside for Bitcoin. It all sounds like it wants further downside. So we're looking at things here on dailies and weeklies, so don't expect them to play out by the time you finish watching the video. But this is the general direction of everything that we're looking at here. It's not particularly good. It's not favourable for spot positions. Like I say, we've had our fun. We've done our trades, and now it's time to sit back and enjoy what it is that we did do, and wait for the next range to be presented to us. And that's where I'm going to go back into the bots, where spot opportunities will present themselves, and just all opportunities in general. But for the moment, we're sinking back down into our previous range, and because we're doing that, I think it's very likely that we do create a brand new range at a lower area. So my new range, like I say, until we actually see it, we can't really be sure of it, but I actually think that first stop is going to be around the 14,500. In fact, we'll get it on a weekly, and I can show you the reasons why, really, but I've made videos on this anyway. So the 14,500 area is kind of more or less shown within this kind of range. So we've got like a low of around 13,500, a high of around 15,000. So we slice through the pie, 14,500. It's also the bottom of the Bollinger Band on the weekly. And if we take this away and move it to a monthly, there's one thing that we can think about here. It's not on this chart, is it? It's on my even longer term chart. On the monthly, and again, these are all things that I've shown on my longer term videos over the weekend. If we go to the monthly on the longer term, we can see that there is one last grain of hope below us if all of these areas fail, and it's your 100 monthly moving average, which is 12,000, which is actually surprisingly relevant on a horizontal basis. We had a lot. I don't know how many of you were around in the last bull market. We had a lot of confluence around this area. It was a bit of a top in itself, whether you classed it as the I suppose like a major resistance, which I think it really was. 12,000 more or less is backed up now by a 100 monthly moving average, which has never been tested, but it's definitely there, and it's something that we could hopefully hold on to for what could be maybe a major bottom form. But until we start to see any of these areas, we just have to wait. Just wait for the ranges, and that's what I suggest everybody do. Just, you know, we've done our fun, we've had our fun. You know, let's just enjoy the gains. Let's not get too clever. If the 4-year market cycle holds, then it means that we're likely going to go into another bull market, a 3-year bull market, give or take. You know, by the end of this year and into next year and so on. So let's not get too clever at the end of a bull market, because at the end of a bear market, because that's kind of what happened last time. I remember watching it. I didn't take part in it. I was watching the situation, but I remember, you know, seriously considering buying at 6,000 as we saw these areas basically get tested again and again and again. But when it did break down, it broke down by 50% and washed everybody out in the end. So, and again, even if you did buy here, which isn't the end of the world, you were redeemed quite quickly for the most part. But this is what I mean when it comes to Bitcoin bull markets. You basically spend a great deal of time going sideways anyway. It doesn't look sideways, but it kind of is. If we think about that $6,000 area, it more or less was a bottom really for the most part. There was a capitulation dump, but it was retested during the bull market, and even broken actually came back down to where the bull market really began, lower than 4,000. So let's not get too clever. There will, if this crypto stuff continues to work out and yield and perform the way it historically always has, then you want to keep your capital on the side for the minute. I certainly do. And when trades present themselves, we can take them. But the only trade I can see right now, outside of, you know, crack trading 1 hourly 15-minute charts, which is not any way to live, then yeah, a new range is going to be formed, whether it's above 14,000 or above 12, and whether that's the bottom, it doesn't really matter. It'll be a range that can be played across all boards for Bitcoin and altcoins, and specifically for me, getting back into those bots. Anyway, I'm going to leave it with you there. Hopefully that was in some way useful. There's a lot of information there. Got the Patreon live stream tonight if you want to join us for that. Links in the description below. Otherwise, I hope you have a nice day and take it easy.